The year's 2022. The real estate market is crazy, interest rates are skyrocketing, and the world might end. But you still might want to buy a house, and I think that's a good idea. Here's why. What's up, guys? My name is Nick, and I like real estate. Just a little quick background, I was able to buy a house at 20 years old, which actually was a townhouse. I rented out all the rooms to 3 of my friends and essentially house hacked it in a sense, so I lived for free. And I've been able to buy a house every year since then. So I'm just a very average Nick who was, see what I did there? Just a very average Nick who has been able to buy a property every year by, just working hard, saving money, and going from there. And now I'm on that real estate journey of financial success. And personally, I think 2022 is a good time to buy, and we're going to kind of dive into why I think that is. A lot of people are probably saying, why would I buy a house right now when house prices are so high? And I think it's important to understand why prices are where they're at. And honestly, the main reason for that is there's a massive supply and demand issue. So we have all these homes that are not on the market for whatever reason. They're being built. People don't want to sell and move and pay, higher prices if they were to go buy a new home, things like that. So there's a massive shortage of homes out there. And even though interest rates are rising significantly, I would argue to say almost skyrocketing because they're about double where they were 3 months ago, it doesn't impact prices the way people think it does. Just because interest rates go up, it doesn't automatically drop prices down. The reason why interest rates do have an impact on housing prices is because it lowers the amount of demand for homes, or some people just can't afford homes at these higher interest rates. Nonetheless, we still have a problem because there's still, even at these higher interest rates, we have so many people out there who still want to get into a home, and so it's not dropping real estate prices much or at all. Homes that had 20 to 30 offers on them previously, even at these new higher interest rates, now have 5 or 10 offers. So while their market is definitely slowing down and there's less buyers out there, there's still too many buyers out there to cause a massive correction in real estate prices. Now if you're going to say, well, in that case, I'm just going to wait a year or two until that demand dies down and then I'll go buy a home, which it's possible that happens. But you also have to think that millennials right now, which, I'm a millennial, everyone in my age group is a millennial, we're basically the largest demographic currently, and a lot of millennials are reaching home buying age, which I think is 34 or 35 years old, something like that. And that's slated to continue for the next 4 or 5 years or so. So while, some people are getting kicked out of the market, we're still going to have plenty of people over these next few years that are approaching that home buying age and that are going to be ready to buy their first home. So you could wait another 4 or 5 years, but chances are real estate prices can continue to climb because we'll still have that demand for homes. Now, with that being said, if the Fed were to raise interest rates and mortgage rates went to 14, 15, 20%, something absolutely crazy, there's a good chance that the market will correct because a lot of people are not going to be able to afford homes anymore, which will obviously drop the demand. But the likelihood of something happening like that is going to be very slim. And if it were to happen, it'd probably cause a lot more issues down the chain in the economy. Now, going back to the idea that we are seeing a slight decline in the economy or the market as well, that can mean that right now is actually a decent time to potentially buy some slightly discounted properties. So, if you had properties that were outrageously priced 3 months ago, those properties are probably having price reductions right now and definitely less offers, if none at all. So those properties like that where people want to sell them, get rid of them in a relatively good time, you could always go ahead and try to get it under market value, get a little bit of a discount in today's terms. So I would look around for those discounted deals and see if that could be your first investment. Now, with all that being said, here's why I think 2022 is actually a decent time to purchase real estate. So if you're currently renting right now and you don't have a home, you probably know that rents have been increasing like crazy. But the worst part is rents have not kept up with the housing appreciation as of lately, and that's kind of slated to change now. So while real estate prices are probably not going to appreciate 20% again like they have the past year or two, rents will likely continue to rise, which means it's going to stress you and your wallet. And so it might not be a bad idea to go ahead and lock down a fixed monthly payment with a mortgage instead of having your rate or your rent jump every single year after that. Since we kind of already mentioned that a real estate crash is going to be probably unlikely, maybe a slight slowdown or correction, that means that you have the opportunity to still potentially ride this appreciation wave that real estate can offer. And by appreciation, I mean it increasing in value every year. So real estate has the tendency to appreciate about 3% every year. In the past, 2 years, it was crazy. It was 20, 25%, depending on the market you're in. But on average, 3% a year. So if we have all these millennials who are still going to be purchasing homes in the next 4 or 5 years or so, and you buy a home now, chances are that real estate prices will slowly still continue to climb as time goes on, and you can bank on that appreciation. So if you bought a $300,000 home and you got 3% appreciation and you held it for 5 years, that's a total of, quick math, $45,000 extra that you could get. Now, if you decided that you wanted to wait those 4 or 5 years and just rent instead, you're going to miss out on that appreciation wave, and that could be an extra $45,000 that is in the trash and not in your pocket. Now, let's say, with all that said, you're still worried about a housing correction. There's plenty of things you can do to mitigate that risk if you still want to buy a home or your first home, and it's not that complicated. So the most obvious one that not everyone's going to fall into, because not everyone has the money to do so, but put more money down. Instead of using a FHA loan with 3.5% down or a conventional at 5%, maybe put down 10, 15, 20% if you can afford to do so. So if we do see a slight softening in real estate prices and we do decrease by 5% or something like that, you still have plenty of equity in that home to cover that gap. Now, my favorite thing to do, and probably the smartest thing to do in just every situation, is to try to find those discounted properties I mentioned beforehand and buy those. So if you're in a $400,000 neighborhood and you have a home that's listed for $330,000, $340,000 because it got some ugly carpet, ugly paint, I'm talking haunted hill type stuff, what you could always do is purchase that property even though it's ugly, put $5,000, $10,000 into it, a lot of sweat equity. You'd be really surprised what a lot of paint and new flooring could do, which is relatively cheap especially if you do it yourself. And that $330,000, $40,000 home might be worth closer to $370,000 to $80,000. So if you fix it up yourself, do all that, and we have a softening in prices, well, you got that $40,000, $50,000 gap in equity that you can use to cover yourself now. So while it's not the most ideal situation if you want to purchase your dream home and stuff like that, it's a good way to buffer yourself in case anything crazy happens. Now I just want to mention again that while I have studied and watched real estate for the past couple years, I'm by no means a financial expert. I'm just an average person who was able to get into real estate at 20 years old, and this is definitely my chosen way of life for sure, and I'm going to continue to do so. So I could be completely wrong. I hope I'm not, but if you want to see if I go bankrupt and lose all my money, or if I turn into a millionaire by 30, make sure you like, subscribe, comment, let me know what you think, and I'll continue to do more stuff like this. Peace out.